What's going on, everybody? My name is JT and you're tuned in to The People's Trader, your source for no-nonsense crypto, fundamental analysis, and technical analysis. If that's the sort of thing that tickles your fancy, then why don't you hit the subscribe button? I do this every single day, except for the days that I don't. So in today's video, we're going to take a look at what is going on inside of Bitcoin. We're going to explore where I think we are, what kind of pattern we're in, and we're going to be using the Wyckoff method to be leveraging our analysis. So let's just take a quick look at Bitcoin. So taking a look at the king of all crypto, we can see here that we had this local distribution pattern. This was when the market was really frothy. DeFi was on an absolute tear and people were making money hand over fist. And then we had a quite significant move to the downside. The move to the downside from that local peak was about a 20% move. Now, a 20% move in Bitcoin, in my opinion, is a huge buy signal. When you get a 20% move in Bitcoin, that is a huge shakeout. We are in an uptrend. You got to zoom out. So if we switch over to the daily, not only are we in an uptrend on the large scale, we have a low and then a higher low. We're working on making that higher high right now. But also in this localized move, since that significant move to the downside back in March, we have been making higher lows and higher highs. So if we go back into the local move here, we can see, I'm just going to pull up this schematic here. So this move right here, I believe, is a reaccumulation after a decline. So I'm going to pull up this schematic here. There it is. You can see the similarity inside of the structure. So with the Wyckoff method, you're taking a look at not only the movement as far as the price action in terms of a fractal pattern, but you're also analyzing what the price is doing in response to the volume and trying to discern what is happening. Are people looking for opportunities to sell, meaning that there is too much supply and not enough demand? Or are people looking for opportunity to accumulate more of the asset and the asset is held in strong hands? That is basically the fundamentals of what the Wyckoff method is going to teach you. If you're interested in learning the Wyckoff method, there's plenty of free PDFs. There's plenty of free information available online. However, I do offer a training course on this method. It's a really powerful method, and it's very different from a lot of other trading styles. A lot of trading styles are kind of based upon market signals in terms of shapes. Pattern trading is based around triangles and trend lines being broken and different things of that nature. But assets go up and down in price based on supply and demand. Bitcoin doesn't go up in price because it broke the structure of a triangle. That's silly to think that. It goes up in price because there are not people selling, meaning that there's a limited supply, and there are people who are wanting to buy. And that is what the Wyckoff method focuses on: supply and demand. So if we take a look, the distribution here, we could see the volume profile. There was a lot of volatility inside of the structure. We got a nice up thrust, quite a volatile movement. Early on in this distribution, I was thinking that this was a reaccumulation. It wasn't until we got this failure from this high here and this test that we really saw the decline. Now, when we saw the decline, we made a decline and we got bought up quite aggressively. If we just switch on the candles here, you can see all of these wicks. Like, we got a ton of buying pressure inside of this area. That's a really good sign. Not only did we have a ton of buying pressure, but it happened at the bottom of this ascending channel. This channel has been in play for a long time, and we've respected the lower end of the channel thus far. Not only have we respected the lower end of the channel, but we are entering this reaccumulation after a decline. So we had this local distribution, and now we are inside of this reaccumulation. I have not moved these lines in weeks. These are not new lines. You can go and check some of my previous videos so that you know that I'm not... that I've been analyzing Bitcoin in this way for a while, but it's following the reaccumulation after a decline schematic to a T. So what am I looking for in the next moves? Well, we could either come up and retest the upper end of the range here, or we can even come up and retest a little bit above. So I wouldn't be surprised if we can get a move maybe up to probably 11,200 or probably about 11,200, but I do expect that we are going to have to come back down, maybe test the middle of the range at about 10,500, or even the top end of the lower end of the range at 10,300. If we do come down into 10,001, that is showing a little bit of weakness, and if we do pierce through the 10.1 area, we're really going to have to pay attention on how the price action responds to that area. We're going to want to see strong buying coming in. We do have this legacy trend line here. You can see that this was the previous reaccumulation, and we got a lot of support and a lot of structure back here, and then we're going to carry that trend line over to this area. So we could potentially see a bounce or a bear trap. We could get a spring. So the spring could come in, bounce off of that, probably close the CME gap. We would then come back into the range and test. If we get a solid test after falling out of the range, that is going to be a very bullish sign for me. Springs, or as they're commonly known as bear traps, coming back into a range show intense buying pressure, and it brings in a lot of investor confidence. So if we see that type of price action, I'm going to be getting really bullish on Bitcoin, and I think we're going to be ready to make a move that is going to surprise a lot of people. Overall sentiment in the space, specifically towards Bitcoin, is that it's old technology, it doesn't work well, it's pretty much just here because it's the currency of the ecosystem. People are comparing it to a stable coin. It's kind of like a safe haven inside of the space. And when I hear those types of comments and that kind of sentiment inside the space, I really think that Bitcoin is getting ready to make a move, because again, it all comes down to supply and demand. If the people who are in Bitcoin now are here to hold on to Bitcoin for the long run. The people who are making money elsewhere in other markets, such as DeFi or some of the higher risk altcoin plays, they're making money over there, and they're convinced that Bitcoin is not going to give them the returns that they're looking for. And in the short term, they could be right. But here's the thing. When Bitcoin makes a solid move, when Bitcoin makes a large move, sentiment changes. So when Bitcoin made a 20% move to the downside, people became extremely bearish on Bitcoin, and they thought that they were going to see lower levels inside of Bitcoin. Now here's the thing, if Bitcoin makes a 20% move to the upside, that's when the community starts pushing all the use cases that Bitcoin has. Listen, Ethereum is fantastic. Ethereum is an amazing product, but with its transition over to proof of stake, people who don't care about smart contracts, people who don't care about the way the blockchain is going to leverage itself into this world, don't want to buy Ethereum. They want to expose themselves to the crypto space in a way that they perceive as, yes, high risk, but safer. And the safest option for these investors who don't understand blockchain, who don't care about smart contracts, is going to be through Bitcoin. Bitcoin is going to be looked at closer and closer by large institutions and large investors as a safe haven against inflation. That's all they care about. They don't care about how blockchain works. They don't care about smart contracts. They don't even want to hear you try to explain what a smart contract is. All they know and all they care about is that Bitcoin works against inflation. Bitcoin has been around for 11 years and has not been shut down. Governments have tried, governments have failed. It is decoupled from regulation. That's all they care about. Smart contracts are great, but billionaires looking to make a high-risk hedge are not buying Ethereum. Billionaires looking to make a high-risk hedge are allocating 1 or 2% of their portfolio into Bitcoin, and Bitcoin only, and it is strictly an insurance policy. So when people start to adopt that mindset, there's going to be a price increase in Bitcoin. So don't be caught without exposure to this asset. It's the currency of the ecosystem. If your portfolio doesn't hold any Bitcoin in it, your portfolio is not structured in a way that really helps you leverage safe decisions inside of this ecosystem. A healthy portfolio needs to consist of Bitcoin, it needs to consist of Tether, and it needs to consist of your higher risk plays. The percentage allocation of your portfolio in those three categories are going to be your strategy. So when things are getting really overheated, we say take profits. When you take profits, it doesn't mean take profit out of one and reinvest it in the other, because when Bitcoin takes a move to the downside, the entire space goes down. So when you take profits, take profit into Bitcoin or take profit into cash and wait for those crashes, because they consistently show up. Nothing goes straight up. We have this boom and bust cycle inside of the ecosystem. And if you aren't using your portfolio itself as a strategy, you're really going to miss a lot of opportunities. Anyways, that is all the time I have for today. If you enjoyed this content or found any value in this information, please leave it a like. Don't forget to subscribe. And if you have any questions or comments, please leave them in the comment section down below if there are any projects that you would like me to take a look at. And until next time, we will see you in the next video. Peace.